Hi, welcome back to Economics 1, and we will be discussing the introduction to macroeconomics. So, in the previous chapters, we have discussed already the microeconomics, where we are talking about the firm, the market, the supply, and the demand. In this chapter, we will be talking about macroeconomics. So, if you are going to listen to radio or read the newspapers, um, or watch TV or reports on TV, you are able to get a glimpse of macroeconomics. So, actually, in the news, people will talk about the inflation every time, increase in gasoline prices, unemployment, and uh, the available jobs, speculations on the effects of US market to the Philippine market and financial institutions. So we actually hear about this every day. It's just that most of us actually dili ta hilig nga mamati ani nga mga things because for us murag medyo komplikado or boring para sa uban. But it's actually very important for us to know the macroeconomics because we will be able to know how our economy or how the growth of our country is measured. Okay, so before we go into measuring the growth of our country, let us go ahead and check the circular flow of goods, services, resources, and the income in the country. Unsa may flow niya, no? Para makita nato because macroeconomics is looking at the bigger picture. So we will be looking at the bigger picture, or in this case, ang atong tan-awon is the economy of the country. Okay, so unsa man ang circular flow? Circular flow, let's say for example, there is a country with just one household and that household will have only one person. Okay? So, he has the land, no, he has a house and he can work. So, what he decided is he established a firm. Sa manang firm, like a company or business or institution. Okay, so he established a firm, and he also, as a household, naapod siya diri. So we have a firm and we have a household. So what is going to happen since nag-establish siya og firm? Ang household dun sa maiyang pwedeng ihatag sa firm. So the household will actually provide land, no? I-provide niya ang land, ang iyang capital, ug ang iyang labor siya mismo because he is going to work in the firm. So, land, labor, capital, and also as an entrepreneur because he is going to be an entrepreneur. So, entrepreneurship will also be provided to the firm. In return, unsa may ihatag sa firm back to the household. So, what will be done? Then the firm will pay rent sa yuta, sa land, wage to pay for the labor, interest to pay for the capital, and in turn, the household will be able to get profit. Okay? So naa siya'y ganansya. And with this, what will happen? The household needs, naay mga needs ang household, di ba? We need food to survive. We need shelter. So, what in turn, what is the firm giving out to the household? The firm will provide for the goods and services that is going to be consumed by the household. So, the goods and services is provided by the firm and then it is going to be consumed by the household. Right? So that is in between household and firm. And if we are going to expand it further, we are going to see here. Let's say I have expanded it, so we will now include the banks, the government, and the rest of the world. Okay, so this is the one country between households and firms that are generating profits and generating income, 'di ba? In exchange, so the household provides entrepreneurship, land, labor, and capital, and consume products. The firm will pay through a rent, wage, profit, and interest, and will also deliver goods and services. So in this turn, both household and firms will also be able to circulate that outside of that country through savings. Asa man padulong ang savings, padulong sa banks. Ang taxes going to the government, and the imports and you are going to spend for importing products and services from other parts of the world. And in return, banks are going to give investment. So they are going to invest going back to the firms and households. The government will also expend. That is going to be consumed by the household and the firms. And then the rest of the world will also export. So they will be gaining export earnings. So ing ana nag-circular ang ah, resources. No, resources, ang goods o ang income. So magka-income, then it will also be spent through savings, paying taxes, and also buying imported goods. And in return, we will be able to get exporting. We will be able to export our goods. The government will spend, and the banks will be able to give investments or to to lend money to the firms for investment. So that is how it it circulates, right? So the question is, um, how do we measure the growth of the economy of one country? So we are able to measure it through by the gross domestic product, which is the market value of all finished goods and services produced within a country in a year or a given time. Okay, so pag mingon tag GDP, tanan na siyang finished products, finished goods and services nga gi-produce within a specific time ha. Let's say for example in a year or in 6 months, in 5 years, na siya specific time in a country. While GNP is the this is the country's GDP plus the net factor income from abroad, meaning the export and import factor. Okay, so this is actually the GDP and the GNP. So you always have to remember GDP gawa dito sa Pinas. So anything that is done within the Philippines nga nikita, that is what we call GDP. But we will still count as our income the things that were produced outside the Philippines by the Filipinos. So mo nagiingon nga GNP. Gitudloan ko sa akong sa una na ako'y napaminawan sa una nga isa ka lecture to understand it, to make it easier for you to understand what is GDP and GNP. So GDP gawa dito sa Pinas, no? So anything that is made within the Philippines. GNP is gawa ng Pinoy. Gawa ng Pinoy. So anywhere in the world, basta't gawa ng Pinoy, income ng Pinoy is still an income, and that is what we call GNP. Okay, so I hope we're clear on that. Now, how do we? There are three ways to measure GNP or GDP, and that is through income method, through expenditure method, and also through value added approach. Okay, so we will discuss these three. We'll start with the income method. So in the income method, so what is the income method? What is the income method? Income method is it describes an approach in calculating GDP through income, and it is also known as factor income approach. Okay, so the income approach method measures the GDP by adding the employee compensation, the rent, the interest rate, and also the profit. Okay, so that is how we we measure the GDP through income by the employee compensation, the rent, interest, and profit. So the it may seem odd because we actually define GDP as the market value of all the finished goods and services produced, 'di ba? So, but why are we looking at income? Nganong income man nga market value man dapat ang definition sa GDP. The reason of that is because let's say for example this is the income of the company. This money actually or anyone spending money on final goods and services, that money is actually received by someone. When we say someone, that will be the workers, because we said it's employee compensation. So katong workers gibayaran nimo, then you pay rent sa landlords, and then you also pay interest rates sa mga lenders or sa banks, and then you also pay for the entrepreneurs. Okay, so that is why we are looking at income in measuring GDP. So we can measure GDP actually by looking into the sending and receiving of the product of the economy. So when we say GDP, or if we are going to use this formula, the in employee compensation, the rent, the interest rate, and the profit, we are actually going to be able to get the GDI or gross domestic income. Now, nganong lahi man siya nga term, nganong dili man GDP. Actually, GDP and GNP is the same or exactly the same. It's just that they are computed or they are calculated in different ways that sometimes their value is uh, it, it 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 differs slightly. Okay, so um but they are actually the same. So the basic idea is that we can compute the GDP by looking at the spending and the receiving end of the economy. So or actually we do both. We compute them through spending and receiving. And we've calculated the GDP by adding the employee compensation, the rent, the interest rate, and the profit. So, in theory, the same yun na sila, the same ang GNP and GDP, but since they are calculated, again, they are calculated in different ways, they usually get slightly different results. Therefore, gipanganlan sila GDI and then GDP. But we have to keep in mind that GDP can actually be split into different ways, but it will always be the market value of all finished goods and services produced within a country in a specific time or in a year, right? So that's how we compute for the using the income approach. Now we'll go to the expenditure approach. So, what is the expenditure approach? In the expenditure approach, we are going to combine the expenses of the household, consumption of the household, and then the expenditure of the firms or investments of the firms, and then the expenditure of the governments, government spending on goods and services, and then the net exports. So you always have to remember when using expenditure method, pag mingon tag consumption by the household, so meaning the household is buying products and services. And if we talk about firms, it will be about investments. So something must be created. We have invested. So let's say, for example, we invested in physical products, no, machineries, or pwede pong intellectual, uh, or pwede pong softwares, ana. And then government spending on goods and services. So the government should spend on goods and services. Let's say, for example, building roads, building schools, may ano siya. And then net exports, that will be the import minus export. Okay, so mo na imong kita, nag-export ka, nag-import. So we have to consider, how do we know uh, if we are counting, or we are computing the correct amount. So I have some examples here. Let's say, for example, San Miguel Corporation pays 1 million for its new facility in Bukidnon. So kintahay na sila yung new facility to produce more products, di ba? So what is going to happen here? San Miguel Corporation is a corporation, is a firm. So meaning he is investing. So therefore, what is going to happen? Ang GDP will go up by 1 million because the investment will go up by 1 million. So remember, ang atong GDP, when we use expenditure, GDP is equals to household plus investment plus government expending plus net exports. So this is a firm which nag-invest siya og 1 million for the new facility. So something is being created. And this is also a physical product because nasa lang new facility. So therefore, it is going to affect our GDP by increasing it by 1 million because the investment increased by 1 million. Another scenario. So a Philippine car rental company spends 1 million to buy 30 new cars that were made in the Philippines. So the Philippine car rental company, so this is also a firm, meaning there is an investment. What is the investment? 1 million para mupalit og 30 new cars that were made in the Philippines. So meaning these are all products and of the Philippines, and the income goes to the Philippines. So therefore, what will happen to GDP? The GDP will also increase by 1 million since the investment went up to 1 million because you have an additional 1 million. So therefore, ang GDP ni mo ni taas o 1 million, right? So another scenario here is a Philippine car rental company spends 1 million to buy 30 new cars that were made in Japan. So what's going on here? This is a firm which is investing 1 million. However, ang mga products niyang paliton are made outside of the Philippines. So these are not products of the Philippines. So although you have an investment of 1 million, so you have an additional 1 million, but the cars are made elsewhere, dili sa Pilipinas. Imong gi-import. Okay? So meaning, this 1 million, wala ni napadulong sa Pilipinas, it went to Japan. So although there is an increase in the investment of 1 million, but there is also a 1 million um, uh, import, no, import expenditure. So therefore, unsay mahitabo sa GDP? Wala siya impact sa GDP because ang investment nga 1 million is counteracted by the 1 million nga import. So naglabas og 1 million ang Philippine car, although ang company is made in the Philippines, but iya man na siyang gibayad sa Japan. Ang 1 million wala ni padulong sa bulsa sa Pilipinas. So nigawa siya. So there is no impact on the GDP. Meaning wala ni grow ang GDP. 'Di ba? Another scenario here is a Japanese car rental company spends 1 million to buy new cars that were made in the Philippines. So unsay mahitabuan ni? This is a firm. Nag-invest siya, but this is not a Philippine firm. Nipalit siya og worth 1 million nga cars that were made in the Philippines. So meaning, unsay mahitabo niya? Unsay impact sa GDP? The net export, because we are exporting, our cars are going to be sent to Japan. So there's a net export increase of 1 million. Therefore, ang GDP will go up 1 million. Meaning nadugangan ang kita sa Pilipinas og 1 million because nipalit ang Japan sa ato og cars worth 1 million pesos. Okay? Next scenario is you buy 1 million of Jollibee stock. So, investment siya, no? However, investment, it should be firm. Pero dili man firm. This is a household. Ang household dapat, account lang siya sa GDP if the household buy goods and services. But this is invest investment. No, nag-invest sa Jollibee stocks. But this is this is not a firm. You are a household. So what is going to happen? There is no impact on the GDP. Remember, walay na produce ani, walay na produce. You just bought stocks from someone else. So walay na create nga bag-o. So therefore there is no impact on the GDP. Okay, another scenario here is Ayala Corporation buys 2 million of Jollibee stocks. So nipalit ang Ayala Corporation of 2 million worth of Jollibee stocks. Unsa may mahitabo? This is a firm. So tama na dapat kay firm man ni nag-invest siya, nipalit siya og stocks. But there is still no impact on the GDP. That's because the Ayala Corporation is just buying someone else stocks. Walay na-create nga bag-o. Wala kay naka-create og bago nga product, wala kay na-create. You're just buying existing stocks na owned by Jollibee, imo rang gipalit, imo rang gipulihan ang Jollibee. So there is no impact on the GDP. Okay, another scenario here is SSS makes 2,000 pesos payment to a retiree. So, 'di ba, this is a social expenditure by the government. So, ang SSS, you will usually say, this will impact the GDP, but actually it will not. It will not affect the GDP. That's because um, this is something that you have not created. No, ni bayad ra ka. There's something that has been created. There's nothing that has been created. So you always have to remember because sa exam mogawa sa mga different scenarios. So you always have to remember if there's nothing created, there's nothing added to the bulsa sa Pilipinas, therefore there is no impact on the GDP. But this last example is an opposite for this one. So let's say for example GSIS buys a new accounting system worth 1.5 million. So unsa may nahitabo ani? It is going to generate new things. Nga naman, new accounting system, it can be computers, servers, software, di ba? Nipalit ka. And then you also hire someone to install the softwares, to run the software, di ba? So, something new is created. There's something new is created. So therefore, the GDP will increase in 1.5 million because the government spent 1.5 million on the product that you bought. No, that will generate new services that will improve the services of the government to the people. So that is how we look at GDP using the expenditure approach. So again, in expenditure, we are going to add the household consumption plus the firm investments, plus the government expenditure on goods and services, plus the net exports. Okay? So that is how the expenditure approach works. Now let's go to the value added approach. Okay, so value added approach. Let's take for example sardines. No sardinas, mega sardines. So unsa may process para mabuo ang sardines? So ato na lang siyang i-simplify sa may process. So from the fishermen nga nangisda for sardines to the factory nga nagluto sa sardines to the canning factory nga nagbutang sa sardine sa niluto nga sardina sa lata. Okay? So, what's happening here? Here in from the fisherman, let's say for example wala sila puhunan. No? Wala sila puhunan sa pagpangisda. And then nakakuha sila mga isda. Ilang gibaligya og 1,500. So unsa may ilang cost value add nila ani 1,500. So from zero nahimo siyang 1,500. Next, the sardines will go to the factories who will cook the sardines. So they are going to cook the sardines. Ang ilang puhunan is 1,500. They get the sardines for 1,500. They sell it at 4,500. So what is the value add? Unsay na add sa ilaha? 4,000 minus 1,500, they have 2,500 value add. Next is lastly to the the cannery, no, kanang mag-can na sa mga sardinas. So they bought the cooked sardines for 4,000 pesos. So that's the cost. And what's the value? They sell it at 6,000 pesos. So the value add is 2,000. So from 6,000, from 4,000, nahimo siyang 6,000. So there's 2,000. Now, how do we add the GDP here? We are just going to add the 1,500, the 2,500, and the 2,000. So therefore, the GDP here is 6,000 pesos, which is the sum of the 1,525 and the 2,000, which are the value added. You don't have to compute to add this anymore, no? Kay in the GDP, we avoid multiple counting, no? Maduplicate na ang count niya. So we only have to know what is the exact value or what is the exact income that will be added to the GDP. And that is why we only get the value added, which is here 1,500, here 2,500, and here 2,000. So that's 6,000. So that is how we compute the GDP using the value added approach, right? So now let's talk about per capita. Per, I'm sorry, it should be per capita. So that's letter A. Per capita GNP or GDP. The per capita is this actually measures the country's economic growth by dividing the national income, either GDP or GNP, with the number of members of the population. So let's say, for example, 33 billion, no, $3 billion ang GNP. We have to divide that to the number of population. So that is the per capita income. And what's the difference between GDP and GNP? The difference between them is just the net factor payments from abroad or the export-import. Remember, GDP is gawa dito sa Pinas. So anything that's made from the Philippines lang. Walay labot ang galing sa ang mga gi-import and gi-export. GNP, Gross National Product, is gawa ng Pinoy outside that's the GDP plus gawa ng Pinoy outside the Philippines. So that's the main difference of GDP and GNP. So I hope you you've learned from this. If you have any questions, you can post your questions on the classroom. Thank you.